Hi, Advanced Accounting. In this video, I'm going to go over international transactions. So international transactions are when a US dollars distributor or a US dollar company has international transactions where they have to have exchange rates involved in the transactions. Okay, so here's the problem that I'm going to go through. It's Bento Corporation, a US-based company, acquired merchandise on account from a foreign subsidiary on November 1st, 2020 for 100,000 crowns. It paid the foreign currency accounts payable on January 15th, 2021. Okay, so I'm eyeing this and I know I'm going from 1 year to the next. So the first year was 2020, but this transaction will not be finished until 2021. So in this particular problem, they're giving you rates for all the different dates. Okay, so so what I did was I already started the problem and I completed journal entries. This problem will not have you complete journal entries. It's going to ask you the effects of these transactions. All right, so let me go to the board and let me show you what the original journal entry would have been on November 1st. So November 1st, Bento purchased, they acquired merchandise on account for 100,000 crowns. So that's the local currency, is 100 crowns. The exchange rate at that time on November 1st is 0.754. So what you do is you're going to take the 100,000, let me do it over here, 100,000, and then you'll multiply it by that exchange rate, 0.754. And when you do, you get 75,400. So that is the US dollar amount. Now you make the journal entry. You debit merchandise and you credit accounts payable. That's your first journal entry. But what happened with this is look at the date. It's December 31st. When you have international transactions that have not completed by the end of the year, you have to adjust it at the end of the year to whatever the spot rate is. So even though they haven't paid on this yet, they still have to adjust to whatever the spot rate is at that time. Okay, so you look at the problem and what is the spot rate at the end of December? The spot rate is 0.742. 0.742. And when you do, you're going to take the 100,000 times the 0.742 and you get 74,200. Now you're going to adjust it to the original amount. It was 75,400, but the spot rate at that time is 74,200. When you're purchasing, that's good. So if it's declined, that means you'll have to adjust it for $1,200. Again, you're purchasing, so that's going to decrease your accounts payable $1,200. And the offset is foreign exchange gain. That's a gain on foreign exchange because it went down, because you're purchasing. All right, now, even though you've adjusted it, your amount now has changed. So your amount now, when you finally pay, so they pay on January 15th, and the spot rate at that time is 0.747. You break it out, so you paid cash, the rate is 0.747. You're going to take the 100,000 crowns, multiply it by 0.747, and that gives you 74,700. So they're going to pay 74,700. But now when you take it off the books, you're going to take it off for this 74,200 because you adjusted it at the end of December. Don't take it off for 75,400. Take it off for 74. You do, you've got a debit here, you've got a credit. Well, guess what? You have a loss. You ended up paying more by the time you paid it from your last adjustment, and you have a loss on foreign exchange for 500. So the question is asking, what is the effects on the income statement? So for 2020, your effect is right here. It's a gain of 1,200. For 2021, the effect is a loss of 500. Okay? I would do journal entries. Don't just do that in your head. Make sure you do the journal entries to keep track, especially because you had this adjustment. Okay? And that's how you analyze that. All right, I'll see you soon for another video.